All right. How's it going, everyone? This is Reginald Lyerly with Keeping Carolina Families Covered. Today, I'm going to share with you some information about the premium deposit account. This is very important for a lot of people, especially as it affects insurance. But let's define what it is, let's define what it's used for, and let's give a little more information as far as how people use this very valuable tool. A premium deposit account, or if you hear the term premium deposit fund, they're one and the same. They're designed for life insurance applicants who want to deposit a lump sum of money in a life insurance policy. But instead of it going directly into the policy, it goes into an account or a side fund, if you would, that actually earns interest. The premiums for the policy are paid out of that account over a 3 to 10 year period. When it's done this way, this eliminates the possibility of that policy becoming a modified endowment contract, meaning if you overfund an insurance policy, taxes become involved. A lot of people use those tools to do that. We'll go into another broadcast what a modified endowment contract is or a MEC is. Since the premium deposit account transaction is between the applicant and the insurer, the premium payments can have a discounted rate of interest. This can save a lot of money. Now, let's look at how it works. You can instead deposit a lump sum directly into the policy. The applicant would deposit the lump sum into the premium deposit account. They would do that first. The first annual premium is withdrawn immediately to fund the insurance policy for that first year. The remaining money will sit in that PDA and earn interest. Each subsequent year, the annual premium is reduced by the interest earned on the funds in the PDA. Here's what you need to remember with premium deposits accounts. They're not insurance products. They help fund insurance products, but they are standalone products. So the interest you earn on those accounts are taxable. So you will receive a 1099 on how much interest that's earned because it's considered taxable income. This is designed to make sure that you're never put in jeopardy to do a modified endowment contract, which most people tend to avoid if they can. Now, are all of your premium deposit counts the same? A lot of them are not. Depending on the institution, there are certain things they require, a certain amount that's required, and it's just going to depend on so many different variables. Different companies they offer different accounts and what they can be used for. But let's look at what this really is as far as what the bottom line is. If you consider your product, like for instance, as an index universal life insurance policy, and you want to use this as part of your retirement strategy, and you want to pay a significant premium in advance, the PDA is going to help you do that by reducing your costs. And if you can reduce your costs, then it funds it to the point where it keeps it from becoming a modified endowment contract. Here's some other things that I can share with you about this different type of product. We know, well, first of all, no, I think we're just going to recap. We know what it is, and we know that it's a PDA. It's designed to fund policies. We know how it's used. We know that it's not an insurance product. It's designed to help fund an insurance product. We now know that the account does accrue if it does accrue interest, the interest accrued on that account is considered taxable income. So we know that. We also know why people use these to help fund their policies to keep them from becoming modified endowment contracts. It's just a basic overview as far as what they are. Depending on the institution, there's going to be specific guidelines on what the minimum and maximum deposit amounts are and the number of payments. But some companies allow the interest to be used to reduce the premium payments, but that's going to depend on the institution and what they want you to do. Just wanted to share that today because you have a lot of people who are looking to fund their retirement. You do have a lot of high net worth individuals that are looking to do this, but they're probably looking for a way to do it that's going to serve their interests, but also be able to look out for their future at the same time. This particular tool supports being able to fund all those other insurance products. Work in the advanced markets, and it's always good to learn this, and it's always good to help people who have questions about this to help them get a good understanding. May not know all the answers, but we'll definitely help a person to point them in the right direction in order for them to see what is best for them. If you'd like to see more videos with regards to stuff like this, don't forget to like, don't forget to share, and don't forget to subscribe. And so we can have more and more and more of these forthcoming. I'm Reginald Lyerly, and I am with Keeping Carolina Families Covered. It is great to be with you once again. Have a great day.